Hey, Anthony.
Hey, Claudine.
We're continuing our FATCA series. Today we're talking about penalties. We've mentioned penalties a lot. And now we want to get down into
and everything just gets better and better.
Yes.
Right? And with FATCA, now we're going to... This is our capstone video. We may add to it later as more wonderful things happen.
Yes, because what we're talking about today is penalties for individuals. We started to investigate penalties for foreign financial institutions, and it was sort of like going into a rabbit hole. So we're going to do a little more investigation and then talk about that.
And also the impact. We were going to try to do a video with both of them, and then we're like, oh, God, no. This Too much.
So FATCA individual penalties, and we're talking specifically today about Form 8938. There are other forms. We know there's FBARs, Form 5471. There's separate penalties for every form.
Each one of those has its own penalty and also its own, and we'll go into the statutes on assessment too in a little bit.
Okay. So for Form 8938, penalty for failing to file Form 8938 is just a quick $10,000, with an additional $10,000 added for each month the failure continues, beginning 90 days after the taxpayer is notified of the delinquency, with a maximum of up to $50,000 per return.
And this is very similar to your 5471, Form 5471 penalties. I think they really basically got the language when they were writing FATCA. Oh, here, we'll just sort of copy and paste. This seems to work, right?
Yeah.
This is the standard penalty structure for these foreign reporting forms.
Yep.
And notice that they did not copy and paste the FBAR penalties at all.
No.
Now, should we go into FBAR penalties now?
Yeah, let's just touch on them quick.
So, we're talking about Form 8938 penalties. And some people might be confused to say, well, is that the FBAR or does that include your FBAR penalties? The answer is that they're completely separate, and you can get both of them. You can get both of them for the same account, and they come from completely different areas of the law. Your FBAR penalties are coming from Title 31, which involves the Bank Secrecy Act, pretty much the Bank Secrecy Act of 1970 that has been amended here and there. But that is the FBAR penalties was the whole idea of that the law enforcement needed the FBAR reporting requirement to crack down on international crime syndicates. It had nothing to do with tax evasion. When you look at the history of the Bank Secrecy Act, which kind of makes sense, it has nothing to do with tax evasion because it has to do with bank secrecies. Were these banks helping criminals move money around because the bank was getting a profit? Well, we want to stop that. That was part of it. So it makes banks report. The Bank Secrecy Act is where you get your suspicious activity report. That requires the bank to say, oh, here's a whole bunch of cash. Yeah, we want to hang on to make money on it, but I guess we have to report it to you as well, U.S. Treasury Department, not IRS. To the U.S. Treasury Department is where it goes. And so that's kind of how you have to think about it. Your FBAR is more like a suspicious activity report than a tax compliance.
Exactly.
Now, what's confusing over the years is no one at the Treasury Department, the Financial Crimes Enforcement Network, they're too important to be loaded down with such irrelevant information such as FBAR reporting, because you're getting all these things from people who are reporting the fact that they have something and are in compliance. You will never get a report by the criminal who's not telling you.
Yes.
So you will never get a lead. It's fairly impossible to get it. The whole idea of the penalty was to cripple them civilly. When you're bringing a charge against a criminal or, say, a politician, right? It's very difficult because they have people on the inside. They might be bribing, or they just have political influence, but they're really mean and nasty people. So it's hard to get them criminally and bring them down and put them in jail. But it's much easier to say, hey, you needed to report the existence of this account. You didn't. And you pretty much were willful about it. So very civilly, without putting you or arresting you, we're going to give you a 50% penalty. And that's why it's so high, because it's not. That's why it's so much more than any tax evasion penalty. It's completely pales to it. It's because it's supposed to stop, not Al Capone. Well, I guess if he was international.
Yes. If he was alive today, I think he'd be international.
I think more like Pablo Escobar. But then even Pablo Escobar, he just had pallets of cash, which the FBAR doesn't apply to. So it's like, well, what were you guys doing here? It's like you had
checkbox A.
Yeah, that's what that Pablo Escobar series was fun. I was watching it, and all I could think about the entire time is like, See the Bankruptcy Secrecy Act? Not doing a damn thing.
Didn't
Didn't do a damn thing, huh? Why don't you get on those FBAR penalties, huh? Oh, that's right, because it's in cash.
All right, so FBAR penalties, they're up to 50% of the account value.
Yep, and or non-willful or 10%, and has nothing to do whether the account makes money or not. Again, the whole idea is nothing to do with tax compliance, but rather were you doing something criminal? And this is something that people I don't think bring up enough when they're imposed, when they're given willful penalties, to say, fine, I was willful. Let's just assume I was willful in it. But what was my purpose of it? If my purpose was tax evasion, that's not the purpose of what the FBAR was for. I am not an international criminal. I do not finance terrorists. Assessing me a willful FBAR penalty goes well beyond the purpose of the law. You want to hit me with my tax evasion penalties? Fine. Hit me with all of them. I'll take them. I'm guilty. But I am not the kind of person who should be imposed or given a willful or even a non-willful penalty. It's really to catch actual criminals doing really nasty things.
Yeah, it's not a good law. All right, so...
Well, I would say it would be a fine law if it was administered in the way it was supposed to be.
Catching criminals.
It was actually doing right instead of getting people who just didn't know about something or creating a parallel penalty structure along, because you have all your tax evasion stuff that existed prior to the FBAR. Look, tax evasion was a crime prior to 1970. It was. All those penalties existed, so all it did was create a parallel system of punishment for people who are already doing the same thing. You kind of have like this double jeopardy thing. It's like this is not. I was doing the same crime. Now you've created an additional crime for the same act.
And now you've got Form 8938, which is even more duplicative reporting.
Right. And a lot of it is the same stuff. Some it's a little different. The thresholds are a little higher. We did a video on the thresholds and how they vary. And there's certain things that need to go on your 8938 that don't need to go on an FBAR. And then certain things on FBAR that don't need to go on an 8938. Is that true? Is the reverse true? I'm trying to think of an example. I'm trying to think of an example of something that would... Wait, what did I say?
Would it go on an FBAR but not an 8938?
Yes, there are. Yes, absolutely. Things you have signatory authority over but aren't yours.
Gotcha.
So absolutely.
Okay. So back to Form 8938 for FATCA. We talked about the penalty for failing to file. There's also a penalty underpayments of tax attributable to non-disclosed foreign financial assets. They are subject to an additional substantial understatement penalty of 40%.
So again, let's just say you're doing the same tax evasion, but if you do it domestically, let's just say you're doing the same thing. Oh, yeah, I want to evade taxes. And you do it domestically. Now this magical thing, and this is sort of what's absurd about it, right? Because the idea is like, well, if you're doing it offshore, that means it's easier for you to do to get away with it. So we want to make the penalties harder. Yeah, but you guys just imposed FATCA to make all this let the world know about everything I'm doing. So if that's true, then why don't you relax the penalties when I'm caught? Because now it's just as easy for you to catch me. So this whole idea and the whole idea about foreign accounts, the whole FBAR penalties go away too, because, well, you're reporting ownership of it, so I can't really use the foreign accounts for the criminal purposes. And I've still tried to find a case where an actual real criminal, okay, and I'm talking about somebody who kills people or orders people to be killed, has been assessed a willful FBAR penalty. I've been looking for cases, and you can find an ex-oil executive who's been assessed willful penalties, but you can't find that criminal mastermind who used the banking system to funnel money to terrorists who's been assessed. I've been looking for it. So if somebody knows it, please, let us know of whoever this criminal mastermind who the FBAR penalties actually were applied to correctly. I would love to know it and
that
share.
That would be really interesting.
And maybe it happened in the 70s. They were, it was a long time ago.
Yeah. All right. If you fail to file Form 8938 or fail to report a specified foreign financial asset that you're required to report, the statute of limitations for the tax year may remain open for all or part of your income tax return until 3 years after the date on which you file Form 8938. This is the big one.
Yeah. This is so significant because your Form 8938, just say, you know what, I'm just going to leave it off. And just going to lay low. I'm going to wait for my FBAR assess. Like the IRS has 6 years to assess me my FBAR penalties. I'm going to try to just wait it out. It's going to be a little hard, but hey, I'm not that big of a fish. You're justifying.
I'm not a criminal.
Right. I'm not a criminal. Right. I just didn't report this because whatever. I didn't know. I didn't think it was fair, but I wasn't. I've never killed anyone. I've never assassinated anyone. I've never blown anyone up. This is huge because the IRS has forever to assess not only taxes on your foreign income, but your entire tax return.
Yep.
So 100 years can come back and they could say, oh yeah.
On your 1040,
Right.
you did such and such.
And this is the difficulty. Years ago, you really had your statute of limitations, and it was in place because stuff was gone. It was just gone and you were never going to get it. Now you have to ask yourself, we're getting stuff very old now because stuff has become computerized. Do these banks shred their files on your bank accounts? No, not really. It goes into an archive. And, is the hard drive destroyed, which it's on now? There's a backup for it. So the fact is, unlike in, maybe 30 years ago, 20 years ago, there was a practical limitation onto how much they could assess.
Right.
There really was. It's like, well, how are they going to get it? Does that exist now?
They're going to go to the library and look at the microfiche.
That is so funny.
Yeah.
I know. Oh my God, I remember doing that. Looking at it like, whoa.
Not going to happen.
You should do that. I think we should go for a field trip just to look something up.
Microfiche.
You find these things. Wow. So what it comes down to is you don't have the technology barrier to being able to assess these things. The things exist. What it comes down to is a resource limitation. So it comes down to, is it worth it to the IRS to assess you or not? Now, if you're thinking, if you think about your typical audits, your audit year is open for 3 years after you file your return. So they're limited to what they're going to do. When the IRS decides to audit something, they always do a risk assessment. What's our resources we're going to put out? What are we going to get out? The IRS used to not be concerned with revenue, which is like what we're trying to do is make everybody tax compliance, regardless if they make $0 or billions of dollars. We want everybody, we're going to treat everybody the same. That attitude has been changed. It's now about show me the money. How much money are you bringing in, auditor? And so they need to go through like, all right, well, we have, if you think about it, you can kind of see where this is going. Because every time they're looking, someone's like, okay, well, the most we're going to get is 3 years, unless we could prove, maybe we can get 6. Maybe we can get 6. And how much each year we're going to add up? Okay, well, they're going through it like, okay, is this really worth it to go after this person? But when you have, we might be able to get FBAR penalties. Ooh, that's nice.
Oh, and Form 8938.
8938.
And maybe 5471 and everything else.
Yeah, everything else. And we're not looking at 3 years anymore. With FBAR, we're looking at 6 years. And then if, time, we've only had the 8938 filing requirements 2011. But let's just say it's 2025. And they're like, oh, should we audit this guy? Well, we see there might be something foreign going on there. We're not looking at a 3-year audit. We're looking at an audit back to 2011.
So Form 8938, let's say you didn't file it in 2011. Can they go back from there?
No, because it didn't exist. However, that's a great question because where this language comes from of not closing that statute on assessment is, Form 5471, 3528, 3520, 8858. This is the same thing that exists for those forms that we mentioned that you do have to report on your FATCA or your 8938, those for controlled foreign corporations, certain foreign trusts and bequests, and foreign partnerships. If you don't do that, they have forever. So it's the same thing. So if you do have a foreign partnership, and this is something that, if you've received an inheritance from overseas, the IRS does have, and you never filed a 3520 or 3528, or both, either one, depending on what was required, the IRS could go back and assess to say, oh, the statute's still open. Yeah, the person's dead, but that doesn't matter. We could still put it against the asset and then claw back the inheritance. So it's all possible. And in so many cases, it comes down to, well, it's possible, but how likely it is. And so you have to do a little bit of risk management. Like, do you really want to file that 3520 from 1998? Well, maybe not there. And also in 1998, the records aren't exactly as good as they are now. But I would say from 2011 forward, everything has changed. I mean, it's everything around the world is digitized, and now everybody's trying to be at least in some sort of compliance with FATCA. So how difficult would it be? Now that there's the intergovernment, there's the sharing back and forth. Again, in 2022, whatever year it is, how difficult do you think it would be for the IRS to subpoena a foreign bank, right? Just say, hey, we'd like to, we're not even going to subpoena you. We're just going to ask you for this stuff.
Ask nicely.
We're going to ask nicely. Or actually, we already have it. Thank you.
We'll just coerce you.
Or just like we don't even need to do it, but we have it. We don't have to get the documents to assess you. We're just going to say, it looks like you have this. You better show to us what it really was, or we're just going to sue more. You don't like it? Tough. So you could see people with 10 years of audits. And now for the IRS, from the auditor aspect, I am just predicting the future because this is what's going to happen. Things are going to change. And as one of the trends that has happened with tax compliance is that there's sort of a bifurcation about who is subject to the IRS. Okay. Used to be everybody. Taxes, yeah, kind of a thing. Now, the vast majority of people pay no tax, no federal income tax. They might pay Social Security and Medicare, but they don't pay the actual tax. The federal income tax is paid, most of it's paid by 10% of the population. And what we're going to start seeing, and what happens with tax compliance, if people are audited, isn't even 10% of the population. It's really 2% of the population is really subject to it. And so this is the same thing. If you happen to fall into that small percentage of individuals who the IRS says, oh yeah, we can get a lot out of these people, you're the one who has to watch out for everything. And then you're really the one. And that's why, for years, I think we've been pretty much telling people, the voluntary disclosure programs might be really crappy, but it's going to be, we can see what's happening in the future. We've been seeing these trends. They want money. They want people they can hammer, and they will absolutely give you an unfair penalty. If you're expecting truth and justice, you're so out of your mind. I mean, we have the IRS I'm honest to goodness. The IRS thinks it's a good idea to assess willful FBAR penalties to someone who came clean in the OVDP, 2009 OVDP program for his retirement accounts. Something that made $500 worth of income. They think willful penalties are appropriate. I know for sure because a guy hired us a couple of years ago to say, I can't believe they assessed me willful penalties. $500 worth of income? And they say, oh, you're a smart guy. Yeah, I'm a smart guy, but I didn't know anything about this, and it's $500. So you think a 50% penalty is appropriate? Oh yeah, because you're a smart guy, and it's our job. The thing is, there's no human element there because everyone at the IRS is doing their job. Well, hey, they're willful. Yep. You gotta have the requirement. So you can't expect any sort of brains. There's no fairness. It's they're a bunch of zombies just taking orders. You don't get it that way unless you get, now it's us saying, well, look, man, you're going to have a fight on your hand. And then they're like, oh, yeah, we are going to have a fight on your hand. Oh. All right, well, what do you want to do then? Well, how about, so that's what it comes down to. But you don't get that until you have the muscle because otherwise they'll just beat you. They don't give a damn about beating up on you at all. They're fine. They're completely fine ruining you or saying, really? Well, here's our proposed penalty. You have your options. You can gamble. And so, really, that's what's going on. And if you see, and I think, we've seen so many things go on, people have started with us, things usually turn out all right, I think in every case. But what we're seeing is when people don't, and they start with themselves and they represent themselves, or they get somebody who doesn't know what they're doing, who gets pushed around, they will push you down into the ground, beat up on you, get a bunch of their buddies, beat the crap out of you, then send you to the hospital, then send you the bill for sending you to the hospital, and then send you the bill for the hospital. And they'll say, you know what, you haven't been working, so we need to get some money for that. It's just wrong all around. And nobody, you're not allowed to say at the IRS, if you're working there, to say, you know what, I don't think this is right.
This doesn't feel good.
I don't think we're on the side of truth and justice here. You're not allowed to say that. Do your job, stupid. We got orders. These people are evading taxes. We're going to be as hard on them as possible. And that is what's going on. You need to get protection. You need to get a lawyer. You need to get in a program. If you're out there dangling around, man, they are just absolutely vicious. So vicious, unbelievably inhuman.
And tricky. They may not come across as vicious. They may just come across like they'll just confuse the hell out of you until you don't know what's going on.
And spin you around. Yeah.
Yep.
Yeah, so it's like you just, you need to get in a program, you need to get real advice. If you have these unfiled, 8938s.
Yep.
And it's not, don't think that you need to be some sort of, Howard Hughes, billionaire to be like a target. It's like, no, they go after regular people and like regular people with retirement accounts.
They're easier.
Yeah.
Howard Hughes would hire really good lawyers.
Right. Yeah. That's the honest truth.
Yeah.
They look for that sweet spot. Okay. They're not going to go for a billionaire. You're not going to get anything.
No.
They're not going to go for someone with nothing. They're really looking for somebody with that $100,000 is low.
They're not even going after corporations.
No,
corporations
because they fight back, and they fight back nasty. So they're really looking for that sweet spot of somebody. Okay, they have this amount, so maybe they'll get maybe they'll get a lawyer, maybe they'll try their CPA. Here's a whole bunch of things, so they know where to go. So it's the smarter people who see, holy crap, I see everything that's going to happen. I get it. That even though I don't feel like I'm the richest person in the world, I am the biggest target in the world. Because there's that sweet spot. Not the highest, not the lowest. Somewhere the high medium, you are the target.
All right, one last penalty. Form 8938. If you do not include in your gross income an amount relating to one or more specified foreign financial assets, and the amount you emit is more than $5,000, any tax you owe for the tax year can be assessed at any time within 6 years after you filed your return.
Yay.
So one last way to get you.
Yeah. It's just lovely.
Yep. All right. Well, lots of good information here. We're going to do a follow-up within the next week. Penalties for foreign financial institutions. Like I said, we're going down the rabbit hole, so make sure you follow us and like and comment below and stay on top of this so you know exactly what's going on with FATCA. Thanks for watching. IRS Medic, the law offices of Parent LLP, real tax attorneys for tough tax problems.